Where do you really think we're going to be? Let's call it Christmas time 2022, Christmas time 2023, Jonathan, at this point.
Right. I mean, first of all, if we look at your first question on why we took our numbers down, we didn't take our earnings numbers down because, if you look at this earnings season, companies are beating by 7%. Margins, putting aside what we've seen at Target and Walmart and some of the big tech companies, margins have held in much better than people thought, and revenues were on fire. But the big issue is that the cost of capital has gone up a ton. I mean, it wasn't too long ago that a 10-year treasury yield was 1%, and now we're at something that's a little bit less than 3%, and we don't really see it going back down to that 1%. So you have to adjust your outlook based on the conditions. The one thing that I think will ultimately come back down and will support the market a bit is that credit spreads blew out, and so that extra cost for companies to borrow beyond just the treasuries. And yet you're not seeing any loan defaults. You're not seeing bankruptcies. So you have this weird situation where credit spreads have widened out, but the performance of the underlying credits are great. And so we think that, effectively you get some of that multiple back that we've lost recently, right, but some of it probably lost here.
Hey, Jonathan, we've been having a debate all morning about whether this is a moment, given where the market is, to leg into it effectively. And we've had lots of different views. There's a technical analysis that says maybe the summer gets a little bit better, but maybe in the fall it actually gets worse. So maybe you don't want to be buying. I think Jeremy had some anxiety, but we've had others who say, this morning when things are bad, Barry Knapp, get in. Where would you be?
No, I'm clearly on the get in camp, but I think it's gonna, I think it comes down to one, simple question, and maybe it's not a simple question. Is there's always a recession in your future. The question is it 3 months away or is it 3 years away? If you believe that we're going to see a recession between now and the middle of 2023, you don't want to be legging into this. If you believe, as I do, that it's going to take longer to kill the cycle that we think, that this is probably something more like early to mid 24, then history proves that these tend to be pretty good buying periods. It doesn't mean that everything is fine. All the bearish arguments that the consumer is strained and what we heard recently from some retailers, I mean, that's not fake news. We know that that's true. But if you don't have a recession, earnings continue to go up, and credit spreads and the VIX will come down, and that'll be good for stocks.